What's going on, guys? My name is Nick Foy, the founder of under30wealth.com, and today we are on my real estate investing website or blog going over how much you should charge to rent your house. So if you're thinking of becoming a landlord, whether you're buying rental property that you're going to rent out, or maybe you've got your own home you're currently living in and you want to rent out some extra bedrooms, or maybe you're going to move out of your home and buy a new home and you want to keep your old home as a rental property. Those are some different ways people get started as a landlord. Either they rent out an existing home they've lived in, or they buy a new fresh property that they're not going to live in. They're just going to buy the property and lease it out as a landlord. So we're going to help you determine how much you should charge to rent your house. So again, you can come to my website, Under 30 Wealth. I'll link to this article below, and you can read the full article, but we're going to go ahead and kind of summarize it for you today in today's video. So we received a question from Mary B through our email. So if you're not on our email newsletter, getting our real estate investing tips, quick plug for that. Again, come to my website or check the links below this video to sign up for our email newsletter where you can get free real estate investing tips to your inbox. So she said, as a new landlord, how do I determine what rent I should charge for my house? I've now turned into a rental property. I don't want the property sitting vacant for long, so she's moving out into a new home and she doesn't want her old home to sit vacant because now she's going to own two properties. So she's trying to make as much as possible to still get a good return on her investment without, trying to overcharge for rent that it ends up sitting vacant a while, trying to wait for a right tenant to pay that high price. All right, so to get started, I did film a previous video that kind of covered my thoughts for her. But I'm going to go ahead and kind of, talk a little bit about setting rents the right way. So in 2011, rents have continued to increase since then. Here we are in 2019. We're about 9 years later into this big bull market where we've seen the stock market go up and up and up. We've seen real estate prices go up and up and up. A lot of people have built wealth again. They've gotten rich again off asset appreciation in stocks and real estate. And you also probably notice rents have gone up a lot since then as well. I mean, just thinking about what rents were 8-9 years ago, I mean, they've pretty much doubled since then in most markets. Los Angeles, rents are getting crazy out there. I was living out there for a year. I ended up moving because of how expensive rents were, and it just didn't make sense when I knew I could buy, property and have like 3 different mortgage payments on 3 different rental properties for the same price of what I was paying for rent out in Los Angeles. So it's been pretty crazy. Just seeing how much rents have gone up. So the first thing you really want to do is kind of just analyze the market. Get a feel for what neighborhoods are renting for. So I use different tools like Zillow. I hop on Zillow and see what all the for rent listings are that landlords have put up on Zillow, and I kind of scout out different neighborhoods that I'm targeting investment property in, and that gives me a good feeler, as far as what people in those neighborhoods are already charging for rent. The other thing you want to do is kind of look at the overall market. So right here, are rents currently rising or falling? So again, you can get some data usually from a real estate agent. They might have access to the MLS where people put up listings of rental properties for rent. So you can see, okay, this year, we had an average of maybe $1,500 a month for 3-bedroom properties. Last year, maybe the average was like $1,300 a month. So you can see year over year, rents went up from $1,300 to $1,500. So rents are still climbing. If rents are falling, you'll also see that, that maybe this year 3 beds are going for $1,400 when last year they were going for $1,500 or $1,600. So you'll be able to kind of see a trend, but I think rents are pretty strong. They should continue going up. There's just so much demand for housing right now, especially housing that's become unaffordable, and that's forcing more and more people to turn to renting, and I think the rental market's pretty healthy as it is. So I don't know that you're going to see falling rents, but if there's a big recession, then of course rents are going to start coming down as landlords compete with each other to keep their properties occupied, as they don't want vacant units during a recession. All right, so again, look at your local neighborhood, see what rents are. That was tip number 1. Tip number 2, what's the overall economy of your city doing? Are rents still going up overall as a whole throughout the city? Are rents falling? Are they flatlining? Which neighborhoods are seeing, the most rent increases that are being the most sought after by families wanting to move into those neighborhoods, which school districts are being sought after most. When you've got this information, that's already pretty much going to give you a head start of where to target real estate investment properties if you're trying to buy a property. It also helps you determine if you're selling or renting a property that you already own. Then you can just look around that property as it is, seeing what in your neighborhood's rented for based on data from the MLS or on Zillow. You can see little circles on the map on Zillow or on the MLS. You're going to be able to see, typing in your neighborhood on the MLS. A real estate agent will be able to do it for you, but they'll be able to pull up to see if anything's rented recently nearby your property and give you some sales comps there as far as what rents landlords were able to charge the property for. So that's pretty much the basic tips on how much to charge, but really it's kind of just analyzing maybe why your property stands out, why you could justify getting a higher rent. So think about features tenants want to pay for. So how many bedrooms is your property? How many bathrooms? Square footage? Is it 1 story or 2 story? Is there a garage attached or detached? Big backyard, pool, fireplace, different amenity type things that you think might attract tenants. If you find that your house has some of those features that maybe the house down the street doesn't have, and you see that what they're renting for, you might be able to justify charging an extra $50 or $100 a month above what they're charging, and actually find a tenant willing to pay that because your property maybe has the better layout or an extra bedroom or an extra bathroom or more square footage. There might be some kind of feature about your property that stands out, allowing you to get higher rent. So that's another thing to do, is analyze your competition in your neighborhood, because a tenant is going to roll through your neighborhood. They're going to see 3 different for rent signs in different yards of different properties if they're targeting that neighborhood. And they're going to, therefore look at all 3 properties to make sure they're making the best decision financially for themselves. So that's how you're going to be able to compare against your competitors to see what they're offering when people are rolling through, checking out their property. You can even set up a showing yourself and go into some of these other properties nearby your neighborhood to see what kind of condition those properties are in, and that'll give you a feel if you feel like you've got a better quality property, or if your property on the other hand could be worse in quality, and therefore you'll know that you probably need to soften your rent price and come down a little bit compared to what your competition's doing. Other things you can do, again, call around local for rent signs. So as you're driving different neighborhoods and you see some different rent signs, call them. Call the landlords, have a discussion, act like you're a tenant if you want, and be like, hey, how much is this renting for? Let them tell you about the property, why they're asking that rent, etc. And then that can give you some more insider information when it comes to renting out your own property. We talked about using Zillow. It's a free website. You can hop on Zillow.com and they've got a filter you can set. It's purple. The little purple dots are rentals. You can set that to just rentals, and you can turn off everything else so that only the little purple dots show. And you can zoom into different neighborhoods or to a specific neighborhood, like the neighborhood that you're going to be renting out a property in, to see what kind of purple dots are in that neighborhood. And as you hover over them, you'll be able to see how much the rent is for those different properties. Again, you can also list your property. So this is an important tip we've actually experimented with ourselves, and it's really the only truth you're going to find is when you actually get out there and actually put your property for sale. So we do all the initial research, but when it comes time to actually listing the property for rent, that's when the market is going to speak to you, and they're going to tell you if you're overpriced. So one of our 3-unit properties we have, we bought it 2 years ago. We took about a year fixing it up. It was a lot of DIY, do it ourselves. We saved a ton of money on the rehab, so we were cool with it taking longer to rehab, giving up all that time. We could have had it rented out, but finally we put it up for rent, and it sat, renting, nobody calling. Once in a while we'd get people interested. And it was just the market telling us we were overpriced. Once we dropped prices, all of a sudden we started getting more calls, more people wanting applications. So that's really the brutal truth here. You can start out at a higher number. You can always come down later. So we started a little higher probably than what we could really get for the property, but we wanted to just kind of test the waters and see if anybody would bite. Nobody was biting, so we came down in price and started getting interest. So that's something to think about. Lastly, don't forget rental property vacancy expenses. So While we do recommend testing the waters, maybe starting it at a higher price, the longer it does sit vacant, the longer you're going to be eating costs like property taxes, property insurance, utilities you're responsible for. So that's some things that we've had to eat while we've been trying to rent out the property and it's just been sitting vacant. All those bills we still had to pay even though we had no rental income coming in. So that's the only downside is, maybe you go a little lower in price your first year just to get the place leased. And then later when that lease comes up for renewal, you can notify the tenant, hey, I'm bumping your rent $50 or $100 a month. And, you can probably convince them to stay and pay that higher rent since they know they kind of got a deal the first year. And you can start raising rents after that and get it back up to kind of market rent if you're worried about dropping the rent price initially because you don't want a vacant property sitting empty causing you, headaches and money. So something to keep in mind when you're leasing out properties, call around, research the market, and then once you list it for sale, the market will actually speak and let you know if you've leased it at a competitive price or if you're above price or below market price. So that's it for this video. Again, kind of summarize this article. Didn't want to read it word for word, but you can read it word for word by hopping over to under30wealth.com and checking out our real estate investing articles we've got on the blog, the YouTube channel, the podcast. We've also got these different courses you can click on up here in the menu bar, and they'll hop you over here to the asknickfoy.teachable.com URL, my subdomain on Teachable. Teachable is a platform you can create courses. So I created a real estate course after getting lots of emails from people asking me to just, kind of cover everything that I knew about real estate investing. So I pretty much did that, broke it up into 16 chapters here, going over the basics, the mindset, strategy, picking different niches, business plans, analyzing markets, finding properties, analyzing properties, financing properties, legal stuff, contracts, due diligence, property management, exit strategies, frequently asked questions, and why real estate perhaps could be the better investment than the stock market. So you can see all the different modules covered in each of those chapters here. Again, just hop over to asknickfoy.teachable.com, linked below in this video description, and you can see the other links below in the video to my website as well. So thanks so much for watching today's video. If you found value, give it a thumbs up, hit that subscribe button, and I'll see you guys in the next real estate investing video.